Hi everyone, welcome to Roots of Stock Market channel. Hope you all are doing good. Please do like, share and subscribe. Let us move into today's marketing session, how the markets have reacted. If you look at the Indian indices today, all have been turned into red, causing the selling pressure in today's market. Majorly, if you see Nifty 50 have fallen around 0.87% and the Nifty small cap has fallen around 2.75%, which is causing fear for the retail investors. Let us see why the stock markets have been continuously falling from the start of month. So if you look at the first probable reason would be FIS, foreign institutional investors, taking out their money from Indian stock market. If you look at the number of amount they have removed from stock market is around 39,000 crores as of today. Let us identify why the stocks FIIs, foreign institutional investors, have been drawing the money from Indian market. The primary reason would be about the China's amendment into the foreign policies for the foreign institutional investors. They are attracting the FIIs by amending its policies, because of which the FIIs have been continuously selling, taking out their money from Indian stock market, and they are putting up and are buying their stocks in the Chinese market. If you look at the Chinese market, so these all are the Chinese market indices, where these have been continuously turning into green, which says us that FIs have been continuously buying the stocks in the stock market, in the Chinese stock market. This would be the first probable reason, and second would be the rising escalations between Iran and Israel. So why the rising escalations between Iran and Israel have affecting the stock market? The first reason would be, if the war is occurring continuously, there will be a issue with respect to the crude oil exports. If you look at the crude oil export data, Iran will be exporting around 9.5% of crude oil into the world crude oil market. So if Iran is going to be affected, so the crude oil exports will be affected, which is why the Indian stock market is also affecting. If you look at the crude oil indices, so from the October 1st, the rate of crude oil is continuously on rise, which indicates that the companies who are working, who are importing the oil from Iran, will be affected because of the increase of crude oil prices. So if you look at the list of companies who will be working in India with respect to processing of crude oil and selling it as petrol and diesel products, the first affected Reliance Industries, and the second would be Indian Oils, Bharat Petroleum, Hindustan Petroleum, and all these are the few companies which will be affected going forward if the tensions are continuously going to escalate. So if you look at it, Reliance Industries would be continuously losing its share prices, because its major revenue will be generating it from the crude oil market, and which is why if you look at from past 5 days, the Reliance Industries share has been on continuous fall. And the third probable reason why the Indian stock markets have been falling is because of the profit booking. If you look at from past 2 months, the Nifty 50 has generated good returns, which is why the people who are trading or who are short-term investors, they are booking their profits because of the ongoing stock market fear crash in India. See, I will be in this video, I will be majorly focusing on the retail investors who are continuously picking the stocks without any analysis, without any knowledge on the stock. See, if you are going to buy a stock, uh, ensure you are expecting that the stock is going to create massive returns out of the investment, which is why every retail buyer will be investing in the stocks. However, there are many people in the stock market who are buying the stocks without proper analysis, and also by looking at the stock recommendations by which will be provided by few firms. They are going blindly with that stock recommendations and buying the stocks, which is why if the market is continuously falling, and even these people will be in fear of losing their money, which is why they will be continuously selling the stocks along with the FIIs or other people who are selling the stock. If a proper investor or the retail investor who will be investing in stocks, he will not buy any stocks which he has already been researched, and who knows what the company will be doing the business and what will be its profits, what will be its market cap, and what will be its market capture. The person who will be continuously doing this research and buying the stocks will be on safer side. At these stages, even though if market corrections will start, however, whenever there is going to be the markets rise, at that stage automatically these stocks which will be performing good from past 20 years or from past 10 years, even that will be on rise. However, there will be operators who will be continuously raising the stock prices, and the person looking at that operating prices and that continuous upward momentum in the stock, if he buys by looking at that particular point, he is going to be trapped, because the operators will artificially, they will try to try to increase the stock price to a higher level, and whenever they feel that this is a good profit they are using, they'll dump the stock and move away. But the retail investors are the ultimate sufferers, who will be buying at top range, and from, say that the stock has gone from 1 rupee to 10 rupees, and the retail investor will be buying the stock at 10 rupees, and the operators will be dumping the stock with huge quantities, so that the retail investor who have bought that stock at 10 rupees price, he is going to be suffering. Which is why before investing into any stock, do your fundamental analysis and trust your company which you are investing. So that's it all, that is all for today. If you would have liked my video and the information, please do like, share and subscribe. Thank you, and let us meet into our next video. Thank you.